Okay, we might as well get her started then. I want to welcome everybody to ABC's 2021 Economic Symposium. My name is Jason Wallner. I'm with Olds, Morrison, Rinker, and Baker, and I'm the current chair of the ABC Board of Directors. Before I get to introducing our keynote speaker, I just want to take a moment to thank all of our partners who you will see scrolling across the screen along with some other information. But without our partners and without their help, we wouldn't be able to put on events like this. They have remained steadfast with us through the pandemic, and so I just really want to say thanks to them and acknowledge what they've done for us. So everybody knows it will be available on YouTube after the presentation. So if you miss something, you'll be able to go back and see it on the YouTube page. So moving on, I would like to introduce our keynote speaker, Dr. Stephen Lurch. He's the Chief Economist and Executive Director of the Washington State Economic Revenue and Forecast Council. Steve has extensive experience in public finance, having served in multiple levels of government and the private sector. I think, for all of us, the biggest, it's hard enough running a business and trying to predict what the future economically is going to look like. That seems to be almost impossible in this day and age with the pandemic and the constant changes. One minute we hear that we're in dire straits, the next minute we hear it's better than we thought. So Dr. Steve's talk today, I think, is going to be extremely useful for all of us. And without anything more, I will turn it over to Dr. Steve.
All right, good morning. Let me share my screen here, pull this presentation up. Hopefully everybody can see that. Okay, so let me start off with just a little bit on where I work. So I work for a very small state agency. There's 5 of us, and we're a little bit unique in that in 1990, the legislature created this agency as a way to have nonpartisan economic and revenue forecasts. So I report to both Republican and Democratic legislators, to a couple members of the governor's cabinet, and also to the state treasurer. They will all vote to approve our forecasts, and once they do, those become the official forecasts for the state. Not every state does it that way. In some places, the governor's office has a forecast, the legislature has a forecast, and they have to argue about that. But here in Washington, we go right to arguing about policy. So we do forecasts about 4 times a year. We just actually yesterday released a new forecast, so I'll be talking a little bit about that. And our forecasts are used, as I mentioned, by the legislature, by the governor for budget development. State agencies use them for a variety of workload indicators. And then we actually have a number of local governments and businesses and just interested citizens that follow us. And so very small advertisement. If you go to erfc.wa.gov, you can go to our website, you can see what we've got there, you can get on an email list to get notifications of our forecasts. Okay, so we use a variety of state and national data and international data. We have models, statistical models that we use for forecasting purposes. But with all that, any forecast requires certain assumptions to be made. And of course, if those assumptions turn out to be incorrect, then your forecast and reality diverge a little bit. And as you might guess, most of the risks around those assumptions, most of those assumptions we have to make lately, last year or so, have been all about COVID, which has been very difficult. This is really not something that shows up in the data. Even I wasn't old enough to have been around for the Spanish flu, which was really the last big pandemic. So we really have made some assumptions about COVID, and those continue to be our big forecast risks. Now, our prior forecast we did in November, and there have been a number of things that have happened since then. After our November forecast, Congress had passed a stimulus bill that resulted in, among other things, $600 checks going to individuals, mostly in January. And then in March, this month, a second stimulus bill has passed. So those are both things that have improved the economic outlook since we did our November forecast. We've also seen vaccines getting out there faster than we had anticipated in November. We've seen really stronger than expected retail sales. And we've seen very strong, especially residential, not so much on the big commercial side, but very strong residential real estate transactions. Some things that are maybe a little bit more of a concern that we've seen since November. Employment growth has been a bit slower, both nationally and in Washington than we'd expected. And there are some sectors of the economy that continue to hurt. Restaurants, bars, any kind of entertainment activities, travel-related businesses really still are all suffering. And I'm sure you've all noticed that oil and gasoline prices have been going up basically since the end of October. So, mostly we want to focus on Washington, but we need to get a little bit of national context in. We have to start with a national forecast to get to our Washington forecast. So first, let me just mention consumer confidence. Now, I should say that in any of these graphs, you see these gray shaded areas, those are recessions. So this bigger gray shaded area, that's the 2007, 2009 recession. The little smaller one is the more recent, what we're calling the COVID recession. And what the data here represent is survey-based information. Consumers are asked, how do you feel about the economy? How do you feel about job prospects, income prospects? And of course, you see, back in the Great Recession there, consumers were not surprisingly feeling pretty bad, not very optimistic. Optimism has really increased until we hit the pandemic, where it dropped like a rock. And since then, it's come back, but still not to where we were prior to the pandemic. Obviously, consumers, see the uncertainty associated with the impacts of the pandemic. When are we going to hit herd immunity? When am I going to get a vaccine? All those sorts of things are certainly generating some concern. And this is one aspect of why consumers might not be that optimistic. This is survey data from the census, and it's asking households, do you have any problems with paying your usual expenses? And so these bars represent the fraction of households that said it was somewhat or very difficult to pay their usual expenses. And you can see going back to August, pretty much for the US, about a third of households, Washington a little bit better, but still around a quarter of households indicating that paying those usual expenses has been difficult. So clearly that's going to be weighing on at least a lot of households in their view of the economy. Now, what we saw, not surprisingly, when the pandemic hit, was a huge drop in retail sales. Obviously, a couple things going on there. People were staying home. A lot of businesses were shut down. I mean, you literally couldn't go out and spend money, even if you wanted to. But since then, we've seen some improvements. It's bounced around, end of the year, fell a little bit. Big jump in January that probably is consistent with people getting those $600 checks. And then a bit of a drop in February. But I think we can certainly say that if we look at this trend, we're back on trend, if not above where we were prior to the pandemic. Now, one sector where we see more optimism than prior to the pandemic is among home builders. So this is a survey that the National Association of Home Builders does in conjunction with Wells Fargo. And you can see where that optimism was prior to the pandemic. It has come down a little bit, but basically home builders are looking at, the demand for housing still, even though mortgage rates have crept up a little bit, low mortgage rates, people are trying to figure out how to sort of make their living spaces work for working at home, for school at home. And so we've really seen a big demand for homes. And I think this reflects that. And if we look at building permit data for both Washington, which is the green line, US, the blue. Since about the middle of last year, the Washington data is a little bit noisier, but we've really seen this tick up. Now, this includes both single family and multifamily, so apartments and condos are in there as well. But we've really seen pretty good increase in residential building permits. And if we look at home prices, very consistent with everything I just said, they've been going up, and they're really going up in just about any market you look at. Here I've got the Case-Shiller index for the US, which has gone up strongly, but the Seattle metro area, we've seen prices go up even more strongly. So definitely seeing increasing prices pretty much anywhere you look. Now, if we look at employment, and so this has both Washington and the US, so there's that big drop. That's April of last year. That's really when the business closures and the pandemic impacts really set in. I mean, this is just an unbelievable drop in employment. And then we've seen some recovery pop back up. We've seen a number of months after April where we saw employment gains both nationally and in Washington. December, we did see a dip, again, both nationally and in Washington, but then up January and February. That's the good news is since April, for the most part, we've been adding jobs to the economies, but over here on the sidebar, you'll notice we're still really not too close to where we were prior to the pandemic. So if you compare employment in Washington to where we were in February of 2020, we are still down 232,000 jobs. Nationally, 9.5 million. So for the most part, since April, the employment news has been good, but it could certainly be a lot better. And if we look at the construction sector specifically, again, Washington is in the green there, the US is the blue. The picture is very similar. Down in March, way down in April, and then for the most part, we've seen a comeback. But again, not back to where we were prior to the pandemic. In percentage terms, the construction sector is doing a bit better than the overall job market. We're closer in terms of construction, both nationally and in Washington, closer to those pre-pandemic employment levels, but still not back to where we were prior to the pandemic. Now, I wanted to just add this. This is wage data to get average weekly wages. There's a bit of lag in the data, and so the most recent data that we have really is for 2019. This is Washington data. Looking at average weekly wages, I just picked a handful of sectors in Washington, and you can see, out here, the biggest, highest wages would be that information sector. So that's going to include your software, telecommunications is in there. The red here, this is the statewide average weekly wages. You can see that construction is that kind of orangey bar there. So, right about at the average. And then way down here on the end, restaurants and bars. Now, keeping in mind, these numbers include both full-time and part-time workers. And so in some sectors, especially say restaurants and bars where you have a lot of part-time work, those average weekly wages may not necessarily be for a 40-hour week, but gives you sort of a sense of where pay is across sectors in Washington. Now, this has been a tough environment, for everyone, obviously, but for economic forecasters, we've had some real difficulties because this pandemic really, we don't have anything in the data to give us a sense. Models haven't been very helpful, and a lot of us really expected some bigger impacts than actually have turned out to be the case. Now, as those employment numbers I just showed you suggested, there's still lots of pain. There's lots of people who've lost jobs who have not gotten back into work. There's lots of businesses that have been closed, some temporarily, some permanently. So I don't want to suggest that there's no pain out there, because we know there is. But forecasters tended to expect some bigger negative impacts from the pandemic than have turned out to be, reality. And so just one example, this is from the Organization for Economic Cooperation and Development. It's an international agency that includes, including the US, most developed economies. And this looks at their GDP forecast for November, December, and March. And just looking at the US as a for instance, back in November, when we did our last forecast, they thought US GDP for 2021 would grow at about 2%. They now think it'll be at 6.5%. That's a big difference. So we really see when we look at these forecasts that forecasters are a lot more optimistic than they were, towards the end of last year even. Now, this is looking at our most recent economic forecast and comparing it to the prior one in November. So this is US GDP. We are looking at, as that last graph might have suggested, definitely stronger growth this year, next year, a little bit stronger growth out through 2025. So all the way across the board there, we see the US economy growing more strongly than we had anticipated in November. And if we look at Washington personal income, so personal income, this is going to be for Washington State if you add up all the wages and salaries, if you add up investment income such as interest payments or rental payments, dividends, those are all going to be in there, but also what we call transfer payments. And transfer payments would include those stimulus checks that households have gotten and are in the process of getting from the last stimulus bill. Those would include unemployment insurance benefits, Social Security payments. And so consistent with that GDP forecast I just showed you, consistent with the notion that vaccines are rolling out faster than we had anticipated in November, we see that Washington State personal income is higher throughout that forecast period compared to where we thought it would be in November. So definitely a more positive outlook. Now, this is our employment forecast. One of the things that we have seen is since November, we've actually seen employment grow a bit more slowly than we had anticipated. And you can kind of see that here in our graph. So that blue line, that's where we thought employment growth would be in November. In fact, it's been a little bit weaker, and so we eventually have it catching up, but a little bit slower employment growth, certainly first part of this year into last year. We do expect employment to grow at about a 2.2% average rate for this year through the end of 2025. Now, I know this is a little bit of a spaghetti graph, but I think this is this makes an interesting and important point. What we're looking at here is employment for the last three recessions: the 2001 so-called dot-com recession, 2007, 2009 Great Recession, and then the greenish line, that's the COVID recession. And we're looking at the percentage change in employment from the month right before the beginning of each recession. So when we get back to zero, that means we've gotten back to where employment was before the beginning of that recession. And what you see for this recession is a much deeper decline in employment, much, much deeper and faster than we saw in the prior two recessions, but a faster recovery. Now, still, that faster recovery, we still anticipate it's going to take about 3 years to get back to February 2020 employment, which would have been the month right before the start of this most recent recession. So this recession has been really different than the last two. The changes in employment came on so quickly and dramatically, but we are expecting those employment gains to get us back to where we were before more quickly than we saw certainly in the last two recessions. Now, also wanted to give you, this is our forecast for construction employment, comparing, the green is our most recent forecast, March, the blue is our prior We really have revised that forecast up all the way across the board. We do think construction employment will peak this year, and we see it coming down a bit and then gradually up again. But we definitely see stronger construction employment than we had anticipated in November. Now, we have seen since our November forecast stronger than expected data for building permits. Again, this would be both single family and multifamily, so apartments, condos in there as well. So we have revised up our building permit forecast, and you can see that 2021 really has shot up and is now above the previous peak of 2019. So we're expecting, particularly this year, very strong residential construction activity, and that is kind of consistent with, get the cursor there, that peak in construction employment that we're expecting this year. Now, I did mention we've seen very strong real estate transactions. So in Washington, if you sell a house or a building or a piece of property, typically the seller has to pay the real estate excise tax. And so this is just looking at the dollar value of real estate transactions subject to that real estate excise tax. And the gap between the blue and the green would represent big, over $10 million per transaction, big commercial transactions. So the sale of an office building or an apartment building or a warehouse as an example. I'm sure that you're probably all aware that starting in January of 2020, the structure of this tax changed. It went from a flat rate on any transaction to a graduated rate. And so December of 2019, you saw a lot of big commercial transactions take place. We assume transactions that probably would have taken place in 2020, but that people were trying to avoid those higher taxes. And then we saw a big dip in residential, in all sorts of real estate transactions into 2020. We think that speed up in commercial transactions that occurred in late 2019. We've got the pandemic. If you were a realtor, you couldn't even show houses. I mean, that really slowed things down. But since then, we have seen this big spike in transactions, certainly in the dollar value of transactions, but also in the number of transactions. And we did see in December of 2020, we saw kind of a 1 month where we had a big spike in commercial transactions, but most of the big gains that we've seen in terms of the dollar value of real estate transactions have been on the residential side. Now, just a couple things on our revenue forecast. So yesterday when we presented this new forecast, we did indicate that we expected a pretty substantial increase in revenue collections compared to what we had anticipated in November. As I said, this has been a tough environment for forecasting. Clearly, we've been a bit too pessimistic, but also the impact of those stimulus bills that we had not anticipated in November has also factored into that as well. But this is just looking at tax collections for our major sources. So this would be retail sales tax, the business and occupations tax, and then use, public utility, and tobacco products. And you can see this kind of big spike. We've seen some really good growth. 3 of the last 4 months, we've exceeded the prior peak of January 2020. So pretty good growth in our tax collections. And I know that none of you are interested in this, but I'll just throw this in because sometimes people ask about this. This is looking at our forecast for tax collections from cannabis. And we saw a couple things happen when the pandemic set in, and one of them was a big spike in cannabis sales. For whatever reason, staying home, socially distancing seemed to generate a lot more cannabis transactions. Since then, they've really kind of bounced around. We assume that will sort of get back to something that looks a little bit more normal. I didn't include it, but the other thing that we saw in terms of a big spike was in sales and tax collections on spirits at the retail level. Bars were closed, restaurants were mostly closed, and so spirit sales and beer and wine sales through those outlets crashed. But we did see big increases at the retail level. So this is just looking at a fiscal year basis at our overall tax collection growth year to year. We are expecting some big increases this year. A lot of that is driven by the impact of those stimulus bills and people out spending that money. We then do expect those growth rates to slow down, but we do anticipate continued growth in collections out through 2025. So let me just kind of wrap up and say that I think people are really feeling much more optimistic, certainly on the forecasting side of the world, about where the economy is headed, that we are seeing stronger growth. Some of that's related to the stimulus legislation, certainly. Some of it is just better news about vaccines and the anticipation that the economy could open up fully sooner than many of us anticipated. But I think we also have to acknowledge there's still a lot of uncertainty, and it's really driven by COVID. We know that there are those more contagious variants out there. We know that it's always possible, we hope not obviously, but it's always possible that there could be some hiccup in the vaccine distribution. So definitely there's a lot of uncertainty in anybody's economic forecast these days. But we do expect US and Washington economic activity to be stronger than we had anticipated in November, and we are seeing some positive revenue growth. So with that, I'd be happy to try to answer any questions.
Okay, well, we have one already in the chat. Let me pull that up. This is from Amy C. Does the expected revenue income include the capital gains tax?
No, great question. So when we do our forecasts, they are always what we call current law forecasts. In other words, they only take into account taxes and fees and things like that that have been passed by the legislature. So we are not incorporating anything from that capital gains tax. It hasn't passed the legislature or been signed by the governor. I mean, it's passed one house of the legislature. So that is not in here.
And again, if you have questions, put them in the chat. I've got another one coming up. This is from Kelly Cook. Did the state's assessment consider that the backlog of 2020 permits are what are carrying over, giving a false presentation that building construction is growing?
That's a very good question. We do track building permit data from the census. And so those data, as I understand our data collection process, as those permits come in or are approved, they're going to show up. So we would have counted anything that was approved in 2020 in the 2020 data.
Okay. While we're waiting for some other questions, I had one sort of regarding particular industries and whether you see any of those increasing. You mentioned residential housing is going to continue to go up for a while. What about the restaurants? What about the service industries? What are your guys' projections, if any, of when those will start rebounding?
Right. So, while I mentioned that revenue collections are up, there sure aren't if you're looking at restaurants, at bars, at hotels and motels. So we don't really see those starting to pick up until, probably into next year, because it's really going to be a matter of once enough people are comfortable and that it's safe to travel Businesses are going to feel that it's safe to have their employees interacting with the public. And so that's really going to require, a further rollout of the vaccines. So we have, heard that the intention is that there be enough vaccines by May. That doesn't mean everybody will have them, certainly. And I think you'll notice, maybe if you just listen to the press, a lot of things that might have happened this year in terms of travel or entertainment, people are still putting off. Leavenworth, for example, just canceled their Oktoberfest for this year, so they're not anticipating that all those things are really going to start happening this year. But I think by next year, we will start to see that happen. And we know that there's a lot of pent-up demand for people to travel and for people to go to restaurants and to do things that they haven't been able to do. So once businesses and the public feel comfortable about that, which really I think means having a vaccine in your arm, we do see those picking up.
Do you see any other industries that might see a big spike? I mean, I'm asking the question from the perspective of a construction company that's looking at where are they going to put their efforts into getting the next project. I mean, is there any you see as a spike is going to be needing construction activity?
Well, it seems like, one of the things that we've seen over time is, even before the pandemic, and you're all aware of this, that online sales have become increasingly important. And then the pandemic has really sped that process up. So, I think that warehouses and distribution centers are going to continue to be in big demand along the I-5 corridor. I live in Olympia. All you have to do is drive out to Lacey and see just the amazing increase in warehouses out in that area, which, its virtue is it's right next to I-5. So, one sector I think it's a big question mark is what happens in the office sector. We've had a lot of people now realize, hey, I can work at home. And their bosses realize, hey, they can work at home. And we'd seen some survey data that asked people who work in offices, and this was national data, once COVID's over, once the pandemic is done, what's your preferred, work situation? And it turns out that, over 50% of the people said that their ideal would be to be in the office a couple days a week and to work at home a couple days a week. If that turns out to be the case, then a lot of employers are going to look at their office space and realize maybe we don't need all of this. But that's an unknown. So that's the sector I think that's really where there's some real questions. Residential certainly looks to be strong.
Let's see. We got another question from Jamie C. What is the forecast for commercial construction?
Well, we like to do bigger forecasts. The smaller the numbers, the worse the forecast will be. It doesn't matter what we're talking about, whether it's the tax revenue or it's employment. So we tend to focus on the overall construction sector as opposed to breaking out, say, commercial and residential. I will say we do have that in our forecast. I have not looked at the breakout. So I would have to get back to you on exactly, how we've got the growth broken out there.
Is that something Jamie or anybody else could find on your website, the erf.wa.gov?
No, it's probably not. We usually don't have that final level of detail, but I can certainly get that to you.
Okay.
Happy to do that. I mean, this is all, we work for you and every other taxpayer in the state, so we're happy to supply that information. My caveat with any forecast is always the smaller the numbers, the bigger the confidence interval around those.
Understood. Wait, we got another one. Hold on one sec. This is from Greg Cabasi. we saw a large drop in we saw a large drop in employer premiums last year from the COVID shutdowns. Have you looked? Have you forecast for labor and industries, or have you looked at a forecast for labor and industries, and are employers going to see an increase in rates for next year?
Unfortunately, that is not a question I'm really going to be able to answer because we are not involved in forecasting their premiums. We're really on the revenue side. We're doing all of the what the budget nerds call general fund sources. So that would be sales, business and occupation tax, use tax, property tax, cannabis, liquor, tobacco products, all of that. We don't do the gasoline or the motor fuels taxes, and we're not really involved in what L&I is doing. So unfortunately, I can't give you a good answer on that one.
Okay. We have another one from Kelly Cook. Do you have any data sources that identify how much volume of work was delayed in 2020? For example, how many permits were issued for commercial work, but building was delayed?
Only indirectly. And the way that we would, get a sense of that is just looking at employment and revenue collections from the construction sector. And, as the one, whoops, not that way. Pull that graph back up. Obviously in here, we've got this big drop in construction employment. As you all know, a lot of construction projects either didn't get, got postponed or got shut down. And so we really did see a big drop in revenue collections from the construction sector as well. The last few months, those have started to increase. They've started to grow. So it suggests that either new projects are being started or those old projects are getting going again, but we're starting to see more construction activity in the last couple of months.
Okay. Any other questions out there? I'm going to make a few announcements, and while I do that, if you have additional questions, go ahead and put them in the chat, and I can ask those. We still have a couple minutes left. But first, I just wanted to remind everybody that as a participant in today's seminar, you also have access to 3 additional, I'll call them webinars, but I believe they're videos on YouTube. The first one is the Payroll Protection Program, and that's presented by Glenn Watton with Moss Adams. If you have questions about the program, I'm assuming that they'll probably tackle some tax issues with it. How do you apply to avoid having to pay it back? So that'll be a good one for there. There's also going to be a talk by Todd Henry, who is an attorney at Inslee Best. Todd is a well-known construction attorney in the land. I used to work with him. He's a great guy. He's a member of ABC's Legal Action Committee, and he's going to be talking about COVID-related construction contract impacts. What happens when you have to slow your job down and then accelerate? What happens when you're shut down? What happens when owners require you to do different work than what you anticipated? Are you going to be able to recover those costs? So that'll be a really good discussion as well. And then finally, we have from Stephanie Carlin, who is a member of the ABC board, Nicholas Warren with Parker Smith. I'm sorry, Stephanie is with Propel Insurance. And then Aaron Buchan with Hub International. We'll be talking about COVID updates from an insurance perspective. I know for me, a lot of my clients call and insurance is a big issue for them. Can they have losses covered by insurance? Are there avenues of dealing with that? So again, that is going to be posted on YouTube. I will leave it to Janessa to explain how you go about accessing those things, because I'm afraid I will butcher it and tell you wrong. So those 3, as I said, you have access to all 3 of those. And if you have questions about how to access those, or if Janessa wants to jump in at the end and sort of give you instructions how to do that, we can do that. Going back to some more questions, and I'm going to try to This one is, I'm sorry, Amy Simonet. I hope I didn't butcher that. Is there any data about materials pricing increases, especially for building materials?
Yes, there is. Can't give you it off the top of my head, but I'm sure you're well aware that certainly lumber prices have been going up, copper prices have been going up. So we've really seen some increases in building materials, and that, of course, is one of the things that, especially combined with the increase in mortgage rates, could tend to start to slow down, some of the positives we've seen in the construction sector.
Okay. And I think the rest that is on there, those aren't questions. That, I believe, is a list of the programs that I just listed off. So those are now listed in chat. If you guys want to take a look, and there's also, I believe, links there to access the program material. Are there any other questions? I'll do a final call. You can probably at this point raise your hand if you've got one. I don't know how that works, but you can do it, or just put it in chat. If not, I want to thank Dr. Stephen Lurch again. I think that this has been enlightening, to say the least. We all have questions about what the future is going to look like, and your data helps us, and encourage everybody to go to their website, take a look at that, and get some updated information. Again, want to thank all of our partners for making the presentation possible. And then finally, I want to thank all of you for joining. And we will see you at events. Hopefully, we'll be able to do those in person. I don't know if Janessa, you want to add anything, or Wendy?
Thank you, Dr. Stephen Lerch, and everyone for attending us today. It was great to see such a great turnout. Thank you.
Thank you all, and we'll see you soon.